Hey, good morning. Good morning. It's Friday, sunny time in Florida time. Yeah, just doing a drive over to a place I have around the corner, meeting a maintenance person to check on something, and driving on FSD engaged, full self driving beta, pre version 11, hopefully, based on Elon's recent tweet answering a question about version 11. Sounds like they're ready to start to push this out generally past the early adopters group and see how that looks. Hopefully after this weekend, that'll be fun. But even recently, again, there's always like some. I mean, I don't get a new version, but like it's adapting or adjusting along the way. It seems like things have smoothed out even in the current version. Things have become a little bit more responsive, and changing of lanes and turns have become a little bit more smooth. A lot of the jerkiness has been at least it feels, this is all just anecdotal, feels like it's been removed from the overall experience. So here I am. We're driving. We got some street and highway. So we'll be switching between full vision and over to the autopilot type highway driving. But yeah, just recently on top of mind, been an advocate for Bitcoin and been into it for about 4 years, more extensively in the past 2 to 3 years, and watching its recent decline in basing, um, eagerly waiting for basically QE or quantitative easing to um, increase the speed a little bit. To the on ramp, I mean, is very specific. Just a side note on the speed limits, like you'll follow the speed limit throughout. Very cautious, safe drivers. Why it does well as far as scoring high and whoa, what is this? There's a lot of trash just like in the middle of the road. No, that's where you still have to pay attention. I mean, it's not completely able to recognize all these items. So, yeah, good to always be aware. Apparently, a lot of trash fell off. There's like debris all over the street. Didn't want to really run through that, get a flat or something. Yeah, so I was saying, the market has been dynamic to say the least. A lot of changes happening given the current scenarios around the banks. I mean, it's amazing. Like, I mean, history does either repeat itself or rhyme, however you want to say it. It just seems like those that can pay attention to history and correlate to what's happening today do very well in life in general, and especially in the market, because scenarios where the Fed has been increasing rates, especially in this scenario where increased rates historical velocity, um, it always comes back to the banks, regional banks, and then major banks potentially eventually. But especially regional banks, they get hit hard by these increase in rates. You know, ever since a lot of the deregulation and removal of the rules around banking to allow them to invest in securities and other instruments to essentially increase their returns. It's created scenarios as soon as the Fed starts increasing rates that brings on stress on these banks. So as soon as the stress gets to be too much, things start to break, consumers get worried, a panic arises, and you have runs and failures. So we had two failures that occurred over the past week and a half now. Other regional banks continue to be pressed on their balance sheets, financial statements, and this has led to the Fed and the federal government is essentially backstopping and inserting a lot of liquidity to the banks, and thus that liquidity is going to transfer over to the economy to the tune of $2 trillion. So basically, all that what was it, like 500 billion or 800 billion, around that range, that was pulled out of the system, and the general monetary or M2 dollars that were suppressed from the system is taking a very drastic V turn. Not just a U turn, but a V turn. It's like just shooting through, and it's having a real impact to the market, stock market in particular. But anything with assets, anything assets related is being repriced. So, I mean, this was already kind of starting about around the October timeframe. People were, anticipating, especially the ones that knew history, that these rates are going too high, too fast. Eventually, something will break. So they were basically making that assumption or correlation with the history and knowledge about the markets that things will have to either slow down or pivot. And most likely at this point, it will be a slowdown. That would be the ideal situation because not enough stuff has broken yet. It seems to be contained. So, kind of backed away from this idea that the Fed is going to be able to increase by half rate and go back to the original plan of just a quarter rate and even reassess that quarter rate going forward for another couple sessions to just being a single session. This most immediate session coming up next week, I think Thursday. So that should be quite the event for the markets. I think I follow different perspectives, and I'm hitching my bandwagon to the idea that there will be this easing that occurs that leads to a real shift, and this shift is going to be dramatic because there's been so much negative sentiment, and that has a real effect, right? The market does swing aggressively from one side to the other, and since it was so far to the negative side, the sentiment that things were awful and horrible and everything is just going to continue to be continue to go down in assets. Now it's going to go the other way, and because of the situation, I mean, with banks failing, as I'm told and I'm starting to learn, is like banks failing is a big deflationary event, and that's what the Fed has wanted up to this point, is trying to get things to deflate, slow down that inflation scenario, and it's getting that. I mean, this is going to be an impact to that, and already the PPI, the producer price index, which is more of a forward-looking event, showing where companies are decreasing their manufacturing and their costs. That's coming through the pipeline to get to affect the CPI. CPI continue to go down, not as fast as it has in the past, but has seen downward trend. So, all right, I'm actually at the place. So, anyways, back to Bitcoin. Bitcoin is up, and most likely for the foreseeable future, it's going to continue going up. All right, here we are. We're all done. Thanks for listening. Hope to see you soon. Another great drive.